Alright, boys. Got the bonnet on. Chewed up bonnet. Because my dog chewed it up. But, let's get into the charts. So, first of all, our bias. These highs right here. These highs and this imbalance right there. That's what I'm looking for. Sometime in between 9:30 and 10 a.m. That's what I'm looking for. But right now, I want to see some kind of manipulation to the downside, which we might get here soon, unless we respect this. But I want to see some manipulation to the downside to take out retail first before going up, and that manipulation would look like this right here. So we have this high and this low that we made, and to me that looks like a fake resistance turned support, which equals sell side, right? Retail sell stops would be right here because they see this high, they see us push through it, and then they see this low bounce right off that high, which is quote unquote resistance turned support. So all of retail has their sell stops right here. So that's what I'm looking at right now. I want to see. That's why I have this level marked at a sell side. So I want to see some kind of Judas swing in 4 minutes once the market opens and to come down into this imbalance, which is also a 5-minute fair value gap. Alright, so that's what I'm looking at right now. I want to see this act as an inversion for a gap. Push price down, so close below it, come back up, touch it, and then push back down and take out this sell side level, and then we could push back up to the upside. Market opens in 2 minutes. See, I want to see this high. I want to see this buy side and this imbalance get hit, at least the buy side before 10 a.m. because that's usually what happens on Mondays. Your objective is usually met around the 10 a.m. Time. And then the rest of the day is either a consolidation or a reversal throughout lunch. We'll see what today has to offer. Just take that off. market opens in 15 seconds. So let's see what she wants to do. Could just go straight up, but I do want to see some kind of manipulation first. Like that. There we go. We have a huge opening range gap. So if price wants to keep pushing down, so you see that? Retail just got stopped out based off what I just explained. Let's see if it wants to respect this or just run straight through it and keep going down for a lower level. Looks like it wants to just keep running down, so I'm gonna have to yeah, I'm gonna have to look at something else. So we take this opening range gap and you find the midpoint, which is right there. And I'm gonna also mark out the 25% level since it's such a large gap. So we have those two levels. We'll make this one blue since that's the 50%. Oops. And then this one is just a 25. So we do have this 15-minute fair value gap right here. You see how we came up, tapped that, and immediately rejected. I want to see how far down this takes us. We do have hourly fair value gap as well. I'm gonna mark out the hourly one. Busy. Actually, we'll leave that there. Just to have that on the chart for you guys to see. So there's that 25% level of the opening range gap. See if there's any respect or if we just go right through it. Okay, so we did hit that 15 minute for value gap. So what I'm watching now is this opening price. Because if price wants to go higher, it will treat this last down close candle as an order block. So that's what I'm looking at right now. If we do go higher, what I would want to look for as an entry would be something like this. We come up, come back down, hit the order block, have some kind of reaction for value gap right here, and then come up to the upside right there off of a fair value gap somewhere in between this leg. Well, let's see. Erase that now. Remember, we don't have to take a trade today, so if it just runs up there without me, that's perfectly fine. But if it does want to offer a entry opportunity, I'm perfectly open for that as well. Looks like it's just gonna run straight up there. Huh? Well, see if we get any kind of retracement back into this this breaker right here. We are getting a retracement now. So we did not get our entry on this account. We may enter off of this down close candle if we get a nice reaction. Let's see. Looks like we might get our entry. We'll go in here. With our stop down here. I mean, really, this price right here should not get violated. Because we have this balanced price range right here. And bring that one back to the 15-minute. So we're coming up on that macro right now. 950 to 1010 macro. So I'm gonna move my stop up to here because of that balanced price range that I did just show you. So let me see if I can add one more right here on this 15-second fair value gap. See if it wants to tag me in. Nice. So you get tagged in right there. We should start pushing up. There's your buy side. I'm looking for that 15-minute inefficiency I showed you guys earlier, though. This one. And let me make it bigger for you guys. This imbalance right here. That's what I'm looking at. We'll have one we'll have a limit order right there, and then at the high right there. I am going to watch this level though, because that is a hourly fair value gap. I don't know if you guys can see that clearly right here. So I'll be watching that level as well, because if we get a strong reaction there, I might just take something off. So we just hit that 60-minute CB. See if we just go straight to the 15-minute CB. Boom. There's your first partial. move my stop to break even now. So on my top step account, we did get out fully. I can't show you guys right now. I have to do something. Hold on, let me make it to where you can see in OBS. Display capture, I believe. Okay, there you go. Alright, so yeah, now you guys should be able to see. We now have a balance of 2.2k after that. This trade was only taken on one of my funded accounts on TopStep because of I took a payout on the other 4, so this is the only one I can trade for now. But yeah, we did take that winning trade. Let me go back to trading view for you guys. Yeah, this is where we're at. I'm gonna move my stop loss and profit at the 60-minute civvy level. So if I do get stopped out, it'll just be like I took a partial at the 60-minute civvy basically. This trade was taken on my funded futures funded account that I had that was in a deep drawdown. So let's see what it's at now. It's a 150k account, almost out of drawdown. Yeah, that account was pretty deep in drawdown, but we are managing to get it out right now. And yeah, it's a pretty nice price run right here. But you guys did see though how I could get rid of this right side. Well, actually, let me just explain real quick. So we had this 15-minute fair value gap that I highlighted, or I didn't highlight it, but I announced it to you guys. So we had that, and then so that was a Judas swing that I was looking for. If we take our fib, actually, we can probably get a nice projection. There you go, your -1 standard deviation at the low right there of the 15-minute fair value gap. Must be random though. And then so yeah, we hit that pretty nicely, as you can see, using this manipulation leg or Judas swing, which I said I wanted to see beforehand. You guys all saw it live, heard it live. Well, not live, but recording live before it happened. So and then what else? Oh yeah, okay, let me get rid of this. So basically, the reason why this fair value gap right here, this fair value gap never got filled was because of this. There's my stop. So I basically took a partial at the 60-minute civvy level, and I got my final position out at the 15-minute civvy level. So that's how I managed my risk there. But that was a nice trade. What was that? 2,000. I also took it on my funded forex account. I can show you that on my phone, because I took that on my phone. Let me see if you guys can see. No, you can't really see that well. But there's your P&L for today. That account was also in drawdown. I've been going. I'll make another separate video explaining where I've been for like the past week. But I've been going through it. My Discord knows. I told them. But here's the. Oops! I just turned my phone off. Here's the balance. We are 700 in profit. So I could withdraw that 700, but I'm going to wait. I want to be able to withdraw a little bit more. So we're gonna wait on that. But back to the charts. Oh, the reason why this fair value gap, damn it, this fair value gap did not get filled was because if we go to the 2-minute or even the 3-minute, yeah, Let me get rid of all this. So as you can see, right, we have this huge drop right here, right at the open, the Judas swing that I mentioned. So you have that huge drop, and then right after that huge drop, we have a huge push to the upside without taking this buy side, right? So what we do is we retrace, but since we have this large down close candle and this large up close candle, this range right here, that becomes a balanced price range. You guys are getting a live lesson with this video, so hope you guys are taking notes. But yeah, this becomes a balanced price range now, and what that basically means is that price was efficiently delivered to both the sell side and the buy side. So price really has no reason to fill this area and come all the way back down. Same thing here, right? We have this on the 2 minute. This is the 2 minute now. We have this balanced price range. Let me see where. No, it doesn't hit it. It almost hits the midpoint, but it doesn't hit the midpoint. So yeah, we also have this on the 2 minute balanced price range, right? So when you have a balanced price range, you never want to see the far end of that balanced price range hit ever. So 3 minute, we just had this inversion fair value gap. A balanced price range is essentially an inversion fair value gap entry as well. It's kind of the same thing, but we have it on the 4 minute and down. 5 minute, there's no it's just two bodies. The 4 minute, right, we have balanced price range. We have this inversion fair value gap right here. Okay, 3 minute, same thing, inversion fair value gap off the balanced price range. And then 2 minute, there's a fair value gap entry right here that you could have taken. Entry right here, stop loss at that right there, and then TP right there. So there's your 1 to 4 R trade, right? Played out in, what's the 2 minute chart? What was it? I think that was less than like 5. No, it was not less than 5. It was like 10 minutes. 10-minute trade. But this is how you. By the way, this is how you get those high R trades. When you have a balanced price range, or another way to get the high R trade is like an order block entry. But I don't enter off order blocks. I mean, mainly propulsion blocks. Propulsion blocks are where the really big R trades are. But since I use fair value gaps, this is what I'm stuck with. But yeah, you could have had your stop loss right here. That would have been like a safe stop loss, right? Because you have this. This is on the 1 minute now. We have this this whole down close candle right here, and then these up close candles. That creates a balanced price range, and the first inefficiency within that balanced price range. Oops, I don't know. Oh, there we go. Is this one right here. So you have that fair value gap, which is what I used for my entry. And you can expect price to never come down and touch this level, this low right here, because of that balanced price range, because price does not need to go all the way down there, because this price was already delivered efficiently. I think that's what a balanced price range is, at least. You always have to think, like, why would price do this? Why would price do that? And that's kind of what I did with the sell side thing I had outlined right here. If you remember at the beginning of the video, where I said retail had their stops here. And it was because of the resistance turn support. But back to this balanced price range stuff. I wonder if it's gonna drop now. I'm not gonna take another trade. They already took my trade for the day, and I'm done. But yeah, so we have this balanced price range And when you have a balanced price range, you can expect to see the far end of that balanced price range. What does that mean? That means if we are bullish and you have a balanced price range like this example here, you don't want to see the lower end hit, and vice versa. If we have a like a bearish, if we're biased bearish, you don't want to see the higher end of that balanced price range hit. You can see the midline on the 1 minute though. So as you can see, using the inversion fair value gap, which is essentially our balanced price range, you take that midpoint and you get that right there. So you usually want to see the midpoint. The consequent encroachment is what, if you want to be specific, of the midpoint of a gap. So there's your midpoint for a balanced price range. That's a very sensitive area in price. Yeah, you never want to see the bodies of the candles close below, or I mean, depending on which direction you're looking at. So like for this example, I would not want to see a candle body close below the midpoint of this balanced price range. If I did, then that would be an indication that I am possibly offsides. Watch this fair value gap right here. To the downside. I'm not going to take it, but I'm just saying keep your eye on that. But anyways, back to this balanced price range. Yeah, the midpoint is a very sensitive area in price. You don't want to see it close below if you're bullish, or close above if you're bearish. So, as well as this, anyways, enough with that balanced price range. We also have this 2 minute breaker, right, that got respected. On the 1 minute, it wasn't really like that clean. As you can see, the body's kind of closed outside of it. The 3 minute is also a breaker. That last up close candle right there, it's your breaker. And then 2 minute breaker, but the 1 minute wasn't that clean. That's pretty much it I have for this trade. I will stay on here for the duration of the macro though, just to watch price push down with you guys. But yeah, that was just my recap of that trade. I wonder if we're gonna take out this level now. There's some sell side down here. I'll take a paper trade for you guys. I know some of you guys just like to see the numbers, but I'm not gonna take that on my. Okay, why am I down $1 million? What is going on here? Let me just reset that. Looks like we're not gonna get our entry. Let's see if we can go on a seconds chart and find a quick entry. Oh yeah, I forgot to explain that 15-second entry. Hold on, I'll do that in a second. It does look like we're just gonna run straight down there though. So that could have been your trade right there if you missed the first one. Stop. This is a very conservative stop right there. Or you could have put your very tight stop loss right there, the fill of that fair value gap. That's what I like to do sometimes. That's another way to get very high R trades, right? Well, we do get entry here. We're gonna go short. Alright, now my broker doesn't want to work perfect. My paper trading broker. What the hell, bro? This side maybe? Oh, it looks like I'm just cooked. See if that fair value gap wants to send price down. Or this 30-second one. If we even get up there. I can't even trade. What the hell is going on, bro? Oh, there you go. Alright, we're in. Put our stop loss there. The fill of that fair value gap. We'll do one more just to be nice. Okay, we can get rid of that now. So we did hit that 30-second fair value gap. I think it's also a 1 minute. Alright, yeah, 1 minute fair value gap. We have our stop loss at the high on the 30-second fair value gap. Let make this there for you guys. We'll put our TP down here. Alright, once this level gets hit, I'll go back to explaining the 15. We'll take one partial here actually, just because why not, right? Why not get paid? So there's your first partial right there. We'll move our stop. Where should we move our stop? We'll move our stop. We'll move our stop right there, I guess. We're gonna take one more off actually, because I don't like that. So yeah, there we go. So anyways, that was a nice quick trade. What was that? 1 minute, a minute 30 trade. So let me go back to explaining this 15-second. Well, it's not really much to explain. It's kind of just it's kind of like I just use this as like a last. It's like a bus, you know, like bus stops. This is kind of like the last bus stop before the expansion phase. And why did I think that? Just because of basically everything summed up. We hit the balanced price range, and then we started going up, and then price really has no reason to come back down. So I was just like, okay, well, if we're gonna go up, where's like the kind of like the last bus stop? Like, where's price gonna be like? All right, this is your last chance, and that's I just went down to 15 seconds. Saw this fair value gap right here, and just like, all right, it's probably gonna use this to expand up because that's kind of like the last chance. And then yeah, there's not really much to that. It's just a fair value gap, really. But I only went down to the seconds chart because after being on the 1 minute, I never want to drop down. I learned this last week actually, during my when I was going through the mud. One mistake I was making commonly was going on the seconds chart, like the 15-second and 30-second chart, without the 1 minute structure being clear. So that was a main like learning point for me that I will be taking into the future. Yeah, I just had to throw that in there. But yeah, as you can see, that was a nice short right there. See, that would have been like a 1 to 5 if you had this very tight stop loss at the high of the fair value gap. This is a reasonable stop loss. Some of you may be like, it's unreasonable, but if you just open your eyes, you can see that we have a 2022 model market structure shift right here during a macro timing, which is very key, right? There's your 2022 model right here. I wonder if there's S&T actually. Let me see. No, there was not. Wait. No, there was not. Wait, was there? No, I don't think there was. Yeah, no, there wasn't. But yeah, there's your shift in market structure right there. Fair value gap entry, and we also have these large up close candles right here, right? Looks like our second TP is about to get hit, but we have these large up close candles to the left side of the curve, which creates a balanced price range. So price doesn't really need to come all the way up and fill in this fair value gap all the way, especially if it's in a hurry during a macro, right? The only reason you'll see like price like fill in this whole entire inefficiency, actually for today that would be acceptable because today is a Monday with no news, so you can see like a little choppier price action where you can see inefficiencies and fair value gaps get filled all the way, even though they really shouldn't. But what was I saying? Yeah, so that's why this stop loss is it's a reasonable stop loss in the right conditions, right? During a macro, after buy side was taken, 15 minutes CIBI, and your time frame alignment with the 15 minute is the 1 minute chart. So this is kind of like perfect. Well, there was S&T actually. is right here. That's your SMT right there. So we did have SMT at the highs. Yeah, so this was kind of like a A+ setup right here, but I didn't take it because I already took my win for the day, and I don't want to take another trade after taking a win, because that's just a personal rule that I have, and I'm completely fine with missing this trade. In the past, I wouldn't have been fine. I probably would have been like beating myself up for not taking this trade, but I am perfectly fine missing this trade because I know that there will be plenty of more opportunities in the future, especially this week. This week looks pretty eventful. We have a lot of news, and then the next week we have FOMC and CPI. So I think no, not CPI, NFP. So we do have some eventful days coming up, and I have no problem missing this one setup. So yeah, that was a pretty nice move to the upside as well to the downside. Some pretty nice models played out. I really like this. I really like this one to the downside. That's why I had to just like stop explaining for a second and just like mention this fair value gap right here, because that would have been my entry if I did not take this long. But I did take that long, so we do have we are not a part of this trade. But yeah, there's your 2022 model during macro time. I'll stay with you guys until my TP gets hit, which it looks like it's about to get hit. Once I get, it's probably gonna go lower, like to the opening range gap 50%. If you're seeing this on Monday, July 22nd, keep in mind this price right here, 19.8 and 27. Keep that price in mind, or the hourly fair value gap as well. If we don't stop, that would be my first like real target. But I just want to get off the chart since I already took my trade. But we do have this 60-minute BISI. So that would be my first. So I'd probably take, well, not probably, I would take partials right here at this low, right, sell side. And then next target would be the 60-minute BISI. And then after that would be the opening range gap 50% level, which is, I'll show you guys again right now. So we have this opening range gap, which is just basically the close from Friday to the open today on Monday. So there's your high, your low, and you have that 50% level right there. If there's anything in this video that you didn't really understand or you want me to explain or go more in depth on, just let me know in the comments and I will gladly go over it, or you can join my Discord and type it in there and I'll answer. But let's just stay and see if the sell side wants to get taken. The macro is over now, so price might want to wait for the next macro in price, which is 10:20 to 10:30. That's your next macro window. So we'll have to see. Well, I'll just sit here with you guys and watch it. See what my Discord's doing. Put our stop loss in right there. And break even, cover the commission fees. That was a nice, it was a pretty nice read on price for today, Monday with no news. It's some pretty nice price action for Monday with no news. My camera looks like a little like, oh my god, that's so much better. I should have done that at the beginning of the video, but whatever. If you guys do like these kind of videos, like these styles of videos, like the live recordings, just let me know and I'll keep doing them. I don't know if I'm gonna wait for this. I'm just gonna move my stop to an unrealistic point price. I'm just gonna move our stop there. I'm tired of waiting, to be honest, and I'm not even really in this trade, so if I get stopped out, I get stopped out. I still made money. I still would have made money. I do think it'll come down here though, but I'm tired of being in this trade. So there's another trade. Make it quick. 1.2k right there. Yeah, I don't really have much else to go over for today. If you did enjoy this video, if you found it insightful, if you learned something from it, do leave a like and let me know in the comments what you learned or what you still have more questions on. And okay, what happened? Oh, nothing. And yeah, I'll continue the changing my life as a trader. I'll continue that series. I know I haven't been very active on YouTube because, like I said, I've just been going through short-term adversity. And yeah, the last 2 weeks, really, the last 2 trading weeks haven't been that good at all. But everything's recoverable, so it's not like the end of the world. So I should be able to make it out alive. As you can see, we did bring that one Top Step account out of drawdown. So that's good. We have 1 account out of 5 out of drawdown that we need to get. So even though it might take some time, it's still possible. So we'll work on that. We also have that. Okay, I'm just running my mouth. But we also have that MyFunded Futures account that I showed, right? That was also in drawdown. That's also now almost at break even. And our last MyFunded Forex account, the 100k that I showed on my phone, that one is now in profit. So drawdown is completely normal. It's completely okay. Just because you're in a bit of drawdown doesn't mean the account is gone, right? Don't give up just because you're in drawdown. For me, that was a big struggle I had, was accepting drawdown. I couldn't really accept it at first, and I would kind of have to like try and mitigate that drawdown in the same day, in the same session right away, and that would just cause me to overtrade and have a lot of and go on tilt a lot. But I've come to accept that drawdown is completely normal. But by drawdown, what I mean by drawdown is this is what I believe, right? Since I believe there's an algorithm in price and there's setups every day, drawdown is, you get drawdown when you as a trader perform poorly. Because these last 2 weeks, I have rarely been offsides. I've maybe offsides, which means like I was wrong about the direction of the market, like maybe like 1 to 2 times in the last 2 weeks. But it was my execution as the trader that caused me to go into drawdown, because I didn't execute right. Now it's just because I had a whole bunch of like psychological problems that I'll probably go over in another video, and it was affecting my performance and execution as the trader, and that is what will occur drawdown. It's not about whether or not, well, for me personally, it's not about whether or not it's usually not about whether or not my read on price is right or wrong. It's more based off of how my performance as the trader is, and how my it's really just all about my mental, and like how healthy of a mental that I have. That's really what it comes down to. Once you get to a certain level of reading price, it's all about your psychological health and what you're thinking about. Because even though you can have a good read on price if you're only thinking about the money, and you're only that'll like distort your view on price, and it will cause you to like make mistakes that you never made before, and you can discover a whole new version of yourself if you're not careful, and you'll have a lot more new problems that you'll have to get over. But I forgot what I was talking about. I'm distracted by price right now. It looks like we're about to push down to that sell side level. What was I talking about? Oh yeah, drawdown. So drawdown is just like, drawdown's completely normal, and you have to accept that you are human, right? You're not a robot, and you are going to do it wrong sometimes. You're not going to always execute perfectly and have a perfect read on price. It's not always going to happen. So when that doesn't happen, you have to have these set of rules that will keep yourself in line. And usually that set of rules is built over time through experience and pain learned. And those rules are set in place to prevent that pain from reoccurring. So say like one day you over traded and you blew your account and you felt that pain. Then you come up with a rule with like 2 trades a day max that will, in order to prevent that pain from reoccurring. Same with over leveraging. Say you had a really nice trade idea, right? Let's say, okay, let me give you an example. So let's say I took this long, right? I took this long right here. I entered, let me give you a very specific example, and I know that some of you guys have experienced this before because I have. So I get in on that candle, right? Boom. I get in on this candle with a large size that I usually don't trade with. So already, as soon as I get in, I'm already very fearful of the trade because one, I'm trading with a size that I usually don't trade with, and that will just cause you to have a lot of fear built up inside of you. So that's why you don't want to over leverage, because that one, look, fear. Your mindset is already, your psychology is already distorted. Your view on price is already distorted because you're backed by fear, because you have too much size on. So boom, get in here, over leveraged, price starts to push up, and then I get greedy and I add more. And I add more on this push up right here. Right? So I add more to that candle. And then let's say that since I added more, my position now comes up. So now my break-even price is right there, right? And because I over leveraged on the first trade, on the first entry right here, and I added more, so now I'm like really over leveraged, and say your entry price is right around there. So what tends to happen is any kind of short-term retracement will scare the living shit out of you, especially if you're over leveraged. So say like you moved your stop loss really tight, right? And then boom, just like that, you get stopped out. While in a winning trade idea, you get stopped out because you over leveraged and you had an unrealistic stop loss placement. So now you're down heavy on the day, right? Because you over leveraged, and then you see price running your direction, and then what does that do? That causes you to go on tilt, right? And I mean, you'd probably get your objective hit, and then you probably try and go long again off of these fair value gaps because you're pissed off about you taking that big loss, and then you're going to over leverage again, try and go long again right here because you don't have a clear, remember, you will not have a clear vision, a clear mind, a clear read on price when you are emotional. So you may be looking at like this trade now in hindsight and like thinking like, who would take this long right here? But trust me, bro, when you are going on tilt, your logical read on price just goes straight out the window, and you just completely forget how to read price. So this is a very logical trade for you to take while you're on tilt, believe it or not. So yeah, you take this long. Same thing, you probably over leveraged because you over leveraged the first one and you're just trying to get back what you made. And then after that, you get stopped out again. over leveraged. That's 2 big losses in a row, and then from there on, it's just like you're just buying and selling, buying and selling, buying and selling, trying to get out of drawdown, but all you're doing is just digging a deeper hole for yourself. So that was kind of just like a rant, but if you have experienced that, let me know in the comments. But not everyone experiences that, just well, maybe everyone does, I don't know. I know I have. So if I have, then chances are someone else likely has. We are inside that 1020 to 1030 macro right now. I want to see if price will run down using this fair value gap. I'll stay on with you guys until this macro is over. Once this macro is over, I'm really getting off because I'm tired. I'm tired. It is now 7:30 a.m. Oops. So yeah, we'll watch and see if price wants to run the sell side during the macro right now, which it probably will. I'm gonna show you guys my payouts right now. That's what I'm looking at. Actually, I'll just show you guys that in another video. I'll just show you guys that in the next changing my life as a trader video. Price has 4 minutes to run down here, so it's gonna have to start running pretty soon. It's taking its sweet time, which I do not like. Some good water. Alright, it's got 3 minutes to start pushing down, or I'm about to get off the charts. See what DXY is doing. DXY, we have thought I just heard someone calling out for help. I don't know what's going on outside, but we have this weekly for value gap, daily. We have this daily for value gap right here with buy side residing right below it. That's what I'm looking for DXY. Buy side, daily for value gap, right? And that's hit it yet? Okay, that's going up, yeah. That means we are getting off the charts. So yeah, if you found this video insightful, if you learned anything new from it, make sure to leave a like, subscribe, and let me know in the comments what you learned new, or if you still have more questions about anything. Yeah, and until next time, be safe, follow your rules. Majority of you know what you have to do in order to be profitable, you're just not doing it. So one day you're gonna realize that you're tired of making the same bullshit mistakes, you're tired of feeling that constant pain, and you're just gonna put your foot down, and it's either you're gonna give up, or you're gonna be like, okay, enough is enough, I'm tired of making the same mistakes over and over again, and I'm going to follow the rules. And that's kind of like the breaking point. Once you reach rock bottom, and you'll be like, damn, like, is this really worth it? And then either you'll give up, or you'll realize enough is enough, and you will lock in, bro. That's really all it is. Every trader has to reach that breaking point in order to determine whether or not they are really a trader or not. Because if you just give up, then you're not really meant to be a trader, and you're just not really inside of you. And that's why 98% fail, because they give up. 98% don't fail because it's impossible to become a trader. 98% fail because they just give up and have no self-control and give up on mastering themselves. That's really what it is. It's not really about reading price. They just give up on mastering themselves. They can't overcome themselves. But yeah, enough yapping. It's an hour. God, I don't even think I'm gonna edit this video at all. It's not really much to edit. If you made it all the way to this video, to the end, 9 chances are you have what it takes to become a serious trader, and you are very serious about your journey. So congrats to you, and I wish you the best of luck, and I know that you will succeed, just based off the fact that you made it to the end of this video. Because yeah, most people probably already clicked off by now, or even if they clicked onto the video in the first place, seeing an hour-long video is not very appealing. So if you clicked onto the video in the first place already, that's already better than the majority of people. And if you made it to the end of this video, then that's another very nice thing of you to do, and it shows how serious you are about this. So you have what it takes, and keep going, never stop. You know what you have to do, so get to it. And till then, be safe.